Hey everyone, welcome to a brand new episode of In the Money with Amber Kanwar. Now, we often talk about stocks, but a lot of people just invest through ETFs, and we want to help you with that as well. I've got Erin Allen, who's the Director of Online Distribution at BMO ETFs, to help us sort out this asset class. Thanks so much for being with me.
Thanks for having me.
So let's just talk first steps. How do you go about constructing a portfolio of ETFs?
Yeah, it can definitely feel intimidating off the hop, but it doesn't need to be. So first step is really to come with a plan. So identify clear goals and determine what your time horizon is, and then frame that up with what you're really looking to accomplish with your investments. Is it long-term capital growth? Is it less volatility? Is it steady cash flow? Or something else entirely. And then from there, you got to open an investment account. So either you can go the advisor route or you can go the do-it-yourself route with an online broker like BMO InvestorLine, which is a really user-friendly platform. They also offer commission-free trading on over 100 of the most popular Canadian ETFs. So it makes it very easy and cost-effective to get started.
So 100 ETFs with all kinds of sector exposure. How nimble should investors be with adapting their portfolio to sector preferences right now?
Sector ETFs make all that very easy. It makes it simple to tactically switch in and out of sectors. Popular approach is a sector rotation strategy. So a lot of investors try to align their sector exposure with where we're at in the economic cycle. So if you think we're in a recession or a contraction, you would overweight more defensive sectors like consumer staples or utilities, for an example. On the flip side, if you think we're in an expansionary phase, fingers crossed, hopefully soon, you might overweight more cyclical stocks like consumer discretionary or technology sectors.
Let's expand a little bit maybe on the defensive side of things, because that certainly feels like the vibe right now. What are some examples of defensive ETFs that BMO has?
Yeah, sticking with sectors, because BMO recently brought the SPDR Select Sector Index ETFs to Canada, trading in Canadian dollars with hedged options. Two sector-focused defensive plays would be ZXLU for utilities or ZXLP for consumer staples. Another thing we're seeing investors flocking to is gold. It's recently reached near record highs. So something like our BMO Gold Bullion ETF, a ZGLD is an option there. And then lastly, I would say factor exposures are something that investors are leaning into a bit more, in particular low volatility. Something like ZLB, or BMO Low Volatility Canadian Equity ETF, is an example there that invests in lower beta stocks relative to the broad market. So it just means a smoother ride for investors.
Okay, so let's talk research tools, because when it comes to investing in stocks, there's a whole swath of research out there. BMO has, an army of analysts that are doing their digging on stocks. What does research look like for ETFs?
Absolutely. There's lots of research tools available, both from BMO InvestorLine and BMO Global Asset Management. So on BMOETFs.com, we have 8 different tools, screening the entire Canadian listed environment, or a comparison tool. We also have a largest and most liquid tool that looks at just the ETFs with the most trading volume and the highest AUM. So that can be an interesting place to start. On the BMO InvestorLine side, they have great tools for customizing, benchmarking, and tracking performance. So definitely encourage everybody to check out those tools.
All right. Thank you so much, Erin, for being here.
Thank you for having me.
For more information, go to bmo.com/investorline.